if you have a presentation, if there's a budget and finance person there that printed one out and you can look at it, fine. Otherwise, if you just read the sheet, you'll be able to kind of follow along with what I'm saying in my presentation here. So slide 1, the background of the change for this new NDI process and formula. We have a new net disposable income calculation and process. This was approved at the 2013 Diocesan Convention to begin on January 1, 2015. This new process takes over for one that had been in place for about 35 years, and it had a couple minor tweaks to it, but otherwise it had been the same one for all these years. And it basically came out of an idea when the Assessment Review Task Force talked to regions and some individual congregations and to various individuals, and many people said they really didn't like having this 2-year lag on the net disposable income process. They wanted to have, quote, real time. So what we put together is something that basically is real time, month by month. And that's what we're trying to work with here. A group of 9 congregations beta tested the use of this calculation spreadsheet over the past several months. And my own view, at least, and I hope the view of the 9 people looked at, thinks it went pretty well. There were very minor changes to it since we finished it, just to clean up a few fields and stuff. Other than that, it is basically the same thing we beta tested. So what is this new NDI? As I said, previously we calculated the assessment on annual adjusted operating revenues and expenses from 2 years back. And the new one uses the previous month's adjusted operating revenues and expenses, virtually the same ones that we were using before. There's actually a couple of improvements, but I'll tell you about those in a little bit. Slide 2, overview of this new NDI. The new NDI calculation is very similar to the current calculation in use through December 2014. And there was a link to the old NDI form, which I don't know if anybody went to that link and wanted to see what that was. But if you took that particular old form and you went down that in that single page and you looked at that and compared that to a single column of the NDI spreadsheet that we're using now, it's virtually the same stuff. So instead of doing that once a year, you're doing it 12 times a year on much smaller numbers is what you're doing, with a couple of improvements. The new NDI spreadsheet, everybody has it. The NDI calculation is based on operating revenues and deductible expenses. You use the immediate previous month's financial data for the next month's NDI calculation. In other words, when you start in 2015, to determine what your January assessment will be, you'll be using December's financial numbers. And when you do February's, you'll be using January's numbers, and so on and so on. And you just keep doing that month by month. It provides columns for all 12 months plus yearly totals to date on the left. And it's calculating all this for you, so you don't have to do it. And you enter in each month's financial data required in the fields, the revenues piece and the deductible expenses piece, and then it calculates the rest for you and gives you your information. So for the total operating revenues, this is slide 3, total operating revenues. Record all your operating revenues for the month. And just to be clear, line A1 says basic monthly revenues used for operations. That includes the same kinds of things that you used to put on there before on the annual basis. The key is there is one difference, and this started actually as of last year, but people have already been working from 2012 to 2014, so some of them didn't see it in 2013 assessment when they did the NDI for that. We're not assessing grants anymore. So any grants from the diocese you get, those are not assessed. And for those who are familiar with the parochial report that goes in every year, that line A1 used to be what was equal to line B on the parochial, the annual parochial report. Line A, which was 2 lines above it on the parochial report, was the same number without the grants put in. Line 7 of the form had grants from the diocese, for the congregation for operating. And so that's been taken out. So essentially you're taking what would be on an annual basis, line A of the parochial report, the things that total up to do that, you're putting that in line A1 here month by month. And basically what it is plate and pledge income, money from organizations of the church, income revenue from your investments that you then use for operations. Everything we're talking about is money used for operations, not non-operating stuff. And none of this is actually different than what we were doing before, other than this business of the grants.
Would this include disbursements from our investment, capital
Yes.
disbursements from the investment account that are used for operating?
That's another line. Yes. The A1 includes the income you got from investments that you use. Some people go and take some part of their income they get out of their DIF or some other investment fund they have, and they use it for some part of operations, their outreach money, or some other thing, okay? And so that's what that's for. Then, line A2 is add your designated or restricted income used for operation. This would be, you're taking money out of your investment fund, basically out of what would be the ongoing amount that's there, not the income that got generated from it. And you're taking that out and using it for operations. Line 3 is you subtract any operating revenues you add to those endowments. In other words, you take some money out, take $5,000 out of it and go, we don't need this in our operating account. We're going to put it in the investment fund.
That happens?
Yes, that happens.
Really?
Yes.
That's never happened to me.
Okay, and then line A4, and we're gonna go through this carefully because it's a special case situation. You add or subtract carryover from previous month's assessment calculation, not what you paid. It's only the calculation. If you had a month where somehow you had more deductions than you had revenue, you would end up with a negative balance, and so you wouldn't owe anything for that month. But you don't get full credit for all the deduction if you don't carry over the negative part into the next month. So that's the way that you can carry over the calculation part. It has nothing to do with what you're actually paying. It has to do with the calculation itself. But it is a way that you can get full credit for your deductions.
Question,
The other part,
Jim?
yes.
Thank you. So is another way of saying that is that if line C ends up being negative,
Correct.
month you would put it up on line A4 as a negative amount?
You take that amount up on, and that would go up onto A4, and that would subtract out of the next month's total. So then you would get credit for it. Okay? That'll probably happen more in small church cases than in big churches, because the revenues will be small, but they might do $1,000 outreach check, or $3,000 spent on the facility, and then that would overwhelm, that was out of their operating money, and it would overwhelm their revenue for the month. So that's why that's there. There is one other possible use of it, and that would be is if somehow 5 months into this you found an error from an earlier month, like I found there's more revenue that I didn't add, or there was a deduction I should have taken and I didn't. So instead of having to go back to the previous month and fix it there, you could put it in there as an add or subtract, and then you'd annotate it on the page after that. Okay? Now, one thing to mention is the spreadsheet that you have, that's just one tab of the file that was sent that you guys got to open up. There's actually another tab for this spreadsheet. And that tab is a sheet that month by month you can list the deductions for mortgage and rent and those kinds of things. Month by month you can list those, and then at the bottom there's for the outreach deductions, where you can go in each month and you can say, I gave $400 to the food bank and $200 to so-and-so children's center and this kind of, and you can put those in there month by month. Then you don't have to go back and find them again. You know, and they total up to what your totals are you put in the spreadsheet. But you just go in that tab real quick, type that information in there, and then you have it month by month. Okay? And I strongly encourage everybody to do that, so that then you don't have to go back and reconstruct it or figure out, well, what made up that set of deductions that month. Just put it in there, and then it's all there. Okay? And it's a simple thing at the bottom. There's a tab. You just tab from one to the other, and you can do it. Okay?
So on the second page, you want to list what was deducted
Yeah.
that month.
Yeah,
Okay.
yeah. Each month, just list what was deducted, and you can put the amounts next to it. It's just you're just writing in text to do it. Okay. So that should be it for revenues. For the next line, slide 4, the new NDI process, calculation of total deductible operating expenses. I've started to talk about this a little bit already. You record any operating expenses involving loans, principal and interest, rent, or purchase of land or buildings. That's items B1, lines B1 through B3. Okay? And these, remember, it has to be from operating expenses. You can't go spend $50,000 fixing up your building out of an investment fund somewhere and then count that as operating expenses. Unless you're going to put it in there as revenue at the top, then you take it out at the bottom. You could do that. Some people do that. You can't double take or take only one side and not the other. B4 is record any improvement or repairs related expenses to the facility and or major components of the church. And there's a note after it. I think it's in the verbiage in the letter that you got, that talks about no 1,000 annual deductible amount for improvements, or no percentage base that you have to pass to allow repairs. On an annual basis, maybe that made some sense, but on a monthly basis, there would be lots of repairs that you'll never add up to make a percentage over your monthly budget, or for a whole year, So we took those out. So basically, all improvements to the facility paid for with operating revenues, and all repairs to the building paid for with operating revenues are deductible. So this should be a good thing for people going forward. This means that if you replace the faucet in one of your bathrooms for $150, that's deductible. Okay? If you have a major repair of your furnace, it's deductible. If you have the only things that aren't deductible, it would be what we call routine maintenance. Like you pay for somebody to come in and clean your carpets, or a few other things along those lines. So I see Olympia's has a question.
It's Joe. If you have me down here, you're going to get questions and comments.
Yeah.
It might be a good idea if people don't already have it in their financial statements, to make two expense accounts, one for maintenance and the other for repair. That way they have a good tracking of what is the repair.
Yeah, that's fine, and people can do that, and that's probably a good plan. The key is just the routine maintenance stuff that you would do. We don't want to have that deducted, but all repairs and all improvements to the facility are deductible expenses if they're paid with operating revenues.
Okay.
Okay.
So if my computer goes on the fritz and I get the computer repair guy comes out and spends 3 days fixing it, is that a maintenance or is that
That would be a repair. Now, the interesting thing is, it depends how you're talking about what the facility is. My point is, if you have a copier and somebody's coming out to do routine maintenance on it, that's maintenance. But is the copier part of the facility?
No, because you can replace it, but a wall is a part of the facility.
Yeah, see, that's the thing. You got to think about this in terms of what are permanent parts of facility or mostly parts of the facility. My point is, you can't deduct rent for copiers and stuff like that either. Okay, you can't work with those kinds of things and have those deducted. But you get the advantage of being able to deduct all actual repairs to the facility, all, not through after meeting some minimum requirement, and all improvements to the facility are now deductible. This should be an upper for everybody. This should be an improvement for everybody. When we get all done, we can ask more questions about this, okay? Slide 5. So the new NDI process, if you looked at that sheet, the final calculations and items for you to record. The spreadsheet will calculate the total operating revenues for you. You just put in the lines A1 through 4, and then it'll give you the total for A. You put in lines, the total deductible operating expenses. You put in B1 through 5. It gives you line B total each month. And then that updates, and then it'll record the amount of assessment. Well, I'm sorry. Then it'll also calculate the NDI for the month and the assessment due, meaning lines C and D. Those are all calculated for you, and they're all right now based on 17% assessment for this year. In 2016, it moves to 16%. So, the things for you to record will be on line E. You'll record the amount of assessment you paid that, you sent in that month. And then the spreadsheet will show any difference for the month, plus or minus, between what is due and what is paid. So, at the start of the year, this is slide 6, at the start of the year, or ahead of time if you wish, you download the NDI spreadsheet from the Diocesan website on that link that was in the letter, and you save a copy for your own ongoing use. You just copy that onto your computer, save that, name it as something, and then you fill in the information where noted for the congregations, the church name, the city, and the ID code. I'll get back to that, and who the preparer is for this. And then each month you'll do the same routine, filling in the stuff we just talked about out of your finance data, these 6 or 8 numbers max, and it'll calculate this for you and give you your NDI and your assessment required. And before I go on, I'll talk about this ID code. Every church of the diocese that pays assessments has what's called an ID code. And for any of you who've already been working with this in the past, when you got an old statement, there would be a 4-number ID code on it. I think our church, Montesano, I think is 5690. And everybody has one like that looks like that. Some kind of, it's a little ID code. The key is you send in your assessment payment each month, and you send in, just take an email sent to Penny, attach your latest saved version of your spreadsheet, attach that to the email, and send that to Penny Curtis at the Diocesan House Finance Office. On the check you have, you do it either a written check, or a few people that are doing some kind of pay thing through their bank. That church ID code needs to be listed on it. You put it in the memo part. Put that on there. That assures that makes it real clear you're paying assessment with that money. Because the diocese isn't going to know, other than seeing your spreadsheet, they're not going to know what you're paying each month compared to anything. And it can vary month by month. So if a check comes in, they're not necessarily going to know it's for assessment. Although most of the time they probably would expect it would be. But it's easier if you put your code on it just to make sure. Okay? And it would be good to also just put on there in that memo, put February assessment payment or something like that. So if you would do that, that will make it clear to the diocese what this is for, and will make it more easily recorded.
Okay, and this is all attention to Penny.
Yes.
Is Penny there? Can I wave at Penny?
I don't know. I don't know if Penny is at D House. I know.
Olympia.
We're seeing Olympia is all we're seeing. I know the new treasurer is at D House. I mean, the new finance officer is at D House. Okay, slide 7.
Jim, we have a question down here in the
Yeah.
room.
Okay, Olympia, go ahead.
It's a really stupid question, but, your operating revenues added to endowment, would you explain that a little bit more for me, please?
Yeah, I said it earlier and somebody here laughed. If somehow your operating revenues or your operating budget, your account that you have in there got large, somehow you getting more money coming in and you were spending and got a good surplus, and you go, you know what, we're not actually going to need that for this year. We'll just put that in the DIF because that makes that makes good money. So you go write a check and send it to the Diocesan Investment Fund. You get to record that on here as a deductible item. Basically, you're saving money, and so you get to deduct that. But it's got to be into your, I'll call it restricted. It's basically, most people have their investment fund, the restricted investment fund or whatever, it's at least designated. The idea is it's used for major building repairs or improvements or an upgrade or any of those kinds of things. So it's not just you're putting it in a slush fund on the side to keep moving back and forth every month. That wouldn't count.
We'll be putting money into ours because we just had a major water break and had to do some major repairs. And part of the money that paid for that came from our DIF, but that's our emergency fund and it's way low now. So we'll be trying to replenish that for emergencies.
Okay. All right. Anyway,
Another
so,
question from Olympia?
yes.
Yeah, we're talking about long-term funds for repairs and maintenance. I assume what you're referring to there is what we would call a reserve fund. So if we need to replace a roof in 10 years, we're setting aside a certain amount of money each month in anticipation of that, or septic. Or
That is valid. Yeah, that is valid. Yeah, that would fit.
Okay, question from Longview.
Yes.
We're setting aside.
Yes.
Okay, so if I
Yes.
received a check designated for the endowment fund,
Mm-hmm.
which is our long-term, only used for certain things, investment fund,
Right.
that usually just goes straight
Correct.
through.
That doesn't go through your operating
It's
budget,
not
so that
go
wouldn't
through.
count.
Okay, all right.
That would not have ever been in the operating fund unless you put it there. Then it would count as revenue up there. Then it would count as deduction, so it would offset itself.
So don't bother.
Don't bother. Yeah. Yeah. Go ahead, Olympia.
Yeah, so the second part of that is now I've spent some time building up a reserve fund and I decide to do parking lot striping and paving. When I
Right.
transfer that into the general fund to pay for those
Yes.
expenses, does it
Yes.
then become part of rejoin operating income at that point?
Well, it actually would. It could. It could go into operating revenues, but then you deduct it down on the deductions part. So it'd be a net
it's still
zero.
a net zero when you
It's
use
still
the
a
money.
net zero. Or you could just spend it and show it as on non-operating, an expense is either way.
So it's
people
like
do
we're
it
gonna
both
get
ways.
taxed twice, yeah.
Right, people do it both ways. The key is whatever he's trying to do is that kind of income, they're trying to never have it, quote, taxed, because they get it to the DIF without it being taxed, and then they take it out and spend it without it being taxed because it doesn't go through the operating account.
Yeah, okay.
Yeah.
Thank
But it's
you.
a good thing. We're keeping the buildings up, we're improving the buildings. That's a good thing. We want people to do that. Okay? So, new NDI process, actions to take. The diocese used to always send you a monthly statement that showed you where you were during the year because they knew how much your assessment was going to be for the year, and so how much per month you would be sending in. Now they're not going to have that per se, so they're not going to send you any kind of a statement or a bill of account or any of that kind of thing. All they're going to do is send the same monthly reminder, each congregation via email, that says, please make sure to send your assessment payment this month. Just a reminder. The reason is we're doing that is because some people said that churches won't, some people won't remember to do that if they don't have a reminder. And so that's what we're doing. Okay? So, and then the new canon for finance and property is working on a method so you can verify the receipt of your payment and your NDI report by the monthly assessment payments report posted online on the Diocese website. There actually is such a thing that exists now. It's well down in the depths of the treasurer's portion of the Diocese website. If you go up in the top corner, up in the top of the Diocese website, there's a link up there that I think it says something about for clergy and treasurers or something like that. And if you look at that and you type into that, you can get a whole host of places to look. And if you go into treasurer's information and go down a couple times, there actually is a report that shows the monthly status of every congregation and their payments of assessments. It's how much they pay for the year and then how much they paid so far. We're looking at something maybe along those lines that you can look at and go and see, okay, it shows I paid this much to date, and it shows here's how much I should have paid because we have the reports. You know, we're getting the reports every month from you, and so they're being compiled up. So that is a way that we can have that, and you could go in and look at that and you go, oh, I can see they're only a month behind. You know, the diocese, they said they put this up on the 10th of the month, and I sent it in on the 8th, and it didn't get recorded in time, and so therefore it's a month off. And you can figure that out. But it's just a way that you can sort of check. You can always obviously call the finance office if you have any concern because a check didn't get cashed or something like that. Slide 8.
Okay, question from Port Angeles, if I may.
Yes, yes.
Several congregations, ours one of them, have operating expenses in excess of total revenue.
Right.
Looking at this form, the way I understand it, the way I understand your explanation, it is quite possible, in fact, it is likely that our assessment will exceed 17% of our total revenues. Because every time we get goes for operating expenses, and then we dig into reserves to make up the deficit. Your line A2 leads us to believe that you would throw those expenses back into income and would end up paying more than 17%.
No, you wouldn't pay anything at all.
No.
That's the way I try to
It's capital
another explanation.
disbursement, and those count.
I understand what you're saying. That was true in the old case too. Except that you were doing it from 2 years previous. But there are people who ended up with higher rates than 17% because their expenses exceeded their operating revenues in a given year. So they actually were paying more than the rate for the assessment. That's nothing's changed in that way.
So long as we're honest and straightforward about that.
God knows.
I can talk more specifically further about that at the end if we want to do that. Or I can talk to you specifically about your case. It does end up being rare that for over a long period of time that a person is working in that mode. You know, a church is working in that mode. But we can talk about that more. Slide 8 was just an example of the monthly assessment repayment report that I had put together to put on a slide to sort of give you an idea what it would look like. You don't have that, so that's fine. Final thoughts on the new NDI process itself. Each month's NDI calculation will change based on each church's unique financial activities. And believe me, they are very different church by church, surprisingly. I mean, you'd think everybody's operating stuff would be about the same, and their expenses would be about the same in terms of what they spend it on. But there are differences in how churches small versus large operate and things like that. So it does make some difference. What we've offered is an option so that each month, to start off this process, you could make the same payment for a few months regardless of the amount the calculation comes out to be, if you would like to do that, just to make it easier for you to be sure to get your payment in. This thing will calculate based on what you recorded for each month, how much plus or minus you were that month, and so you'll be able to track on the left whether you're in plus or minus for the year, and so you then can catch up as the year goes on. I sort of call it like the budget payment, like you would do with your energy bill. That some places you make the same payment every month, and then the last month you settle up with plus or minus where you are. So anyway, that's one option, and the starting point would be your previous year's assessment. You could just use that monthly number and start with that. I will mention that it was brought up several times with the beta testing. People go, well, the first month we're using for the year is December to calculate January, and that's always the biggest month. So therefore, the assessment amount for that month would be bigger than the other months likely will be. And we don't know if we have the money to pay that then. Well, you probably have it, but if you're really worried about that, start with this budget payment, but recognize you're going to have to make that up if that's truly what happens in your church. So, but you got to pay that month sometime. You might as well know right away what it is, and be able to deal with it for the rest of the year. So, my final point. Yes.
Opposite question.
Yes.
I was on your committee of 9, and we've discussed this previously. In December, we pay more than we take in by quite a bit. And what I'm doing in the beta test is we have set up a fund for outreach that we have not included in our income, so that you don't owe us thousands of dollars in January.
What?
Oh, you're saying you make a lot of at the December you make a lot of your deductible payments out, like outreach. Thousands of dollars. We do that at our church too, and so we end up, and that's why I immediately knew in January I had a negative balance for the month, and wouldn't be owed. In theory, the diocese would owe me money. Instead, this thing allows you to go and keep deducting that until you've used all the deduction up. So you'd pay zero for the month for January. You could pay zero.
Okay, and probably for.
It could be for a couple of months.
And March.
It could be for 2 or 3 months. But recognize, I understand, but recognize over the rest of the year, then you're going to have a lot of bigger months, probably bigger than the other ones you've seen, in the past when you paid the same every month, because you won't be getting any of those deductions the rest of the time. That's why you'll get some, but not that big amount. The point is, your deductions are not all equal every month. They vary from month to month, and that can make a real difference in how much you pay each month, to the point of having a negative balance. So there, you are correct. This tries to handle it, and also tries to give you a way to deal with it in sending in your assessment. I would recommend people don't take 0 months and not send any money in. I would recommend you put something in there, to sort of be covered, and for the months you'll be low. But that's up to you guys to look at and manage yourselves.
Okay, thank you.
Okay? So, my final chart, this is the contacts, and you have it on your letter. The contact people, at least to start, are Penny Curtis at Diocesan House. That's where all the stuff is going to go. And we'll get sorted out by her and Lee and the rest of the finance office. And then I'm going to be a person working on the side, reviewing these spreadsheets and sort of making sure that everybody's understanding them well, and they look like they're getting calculated reasonably. And if anybody has any questions, they can always call me about any specifics like the gentleman just asked. You can talk to me about those kinds of things anytime if you think of it. You can call me or you can email me, and we can talk through some of these scenarios before we ever start. So if you think up stuff like this. So that's where we are at this point. I know Joe McGuire is on budget and finance with me and has talked from Olympia. He's offered to help me with some of this too, and I'll be happy to have others be able to get knowledgeable quickly about this. I think he's been treasurer of his church and is very interested in how this works too. So we can kind of share with each other how this goes and make this go. So that's the extent of my presentation itself. So I guess now we can open the floor to other questions people may have. Question in Olympia.
Who is he?
Who is who?
There you
Jim
go.
said contact me, but I don't know what his name is.
Jim Campbell.
Jim Campbell. Yeah. I'm the name that's on the letter. Jim Campbell.
I didn't get a letter.
Okay, you're one of them that didn't get one. Okay, well, it's in there. I suspect it's at the church email somewhere. Hasn't gotten distributed yet.
Jim, I have a question.
Yes.
On recording outreach income, for example, money that we send to the food bank or ECA or UTO, when the money comes in, often it comes in over more than 1 month. I might have donations on January and February, and then I might not cut the check to send out to whatever agency it goes to till March. So do I count that as income and pay 17% of it in January and February and then deduct it on March?
That's if you're a church that runs their outreach budget through the operating account, because not all churches do that either. If you're getting specific checks for outreach, some people have a separate outreach operating account because you can, and you know it's deductible anyway, so then you just keep it out of the operations. Lots of churches like to run it through the operations. So yes, the month you would get that in, if it counted as operating revenue, was in an operating revenue, it would count as income and it would be deducted that much. When you sent the check out, then it would be deducted off.
So the net would be the same?
The net would be the same, it's just when it's happening, yeah.
Okay.
Yeah, and that, the only way that happened before is if it happened year by year in the old scheme, when it was only once a year. If you got the money in 1 year and didn't spend it, then it would be deductible, and then the next year you would send it out and it would get a deduction the next year.
That did happen, except that I backdated the check, so I didn't get
Okay,
that.
well, I don't want to know that. More questions?
Jim?
Yes, Olympia.
A clarification. Under no circumstances will anybody pay more than 17% of their total deduction, of their net disposable income. It's not net disposable income might change, but the rate does not change.
Oh, the rate doesn't change. What the one gentleman was referring to is an effective thing where somehow, you had more expenditures than you had revenues, and you were taking money out of reserves and whatever. Effectively,
I understand what he was saying, but
yeah.
he said he's paying more than 17%, and that's not true.
Well,
He's paying more than 17% of his income.
his rate didn't change. That's true. I can tell you that a church that has high deductions can be down as low as like 11% if you go look at the total revenues before net. Your total revenues before net, and then you have major expenses. One church could be at 11 or 12% an effective rate they're paying, where other ones could be more than that. But, and actually, just to let you know, the assessment rate is 17%. If you take off all the allowable deductions from all the churches in the past, and you look at a typical year, the effective rate of payment of assessments on the total operating revenues is more like 15.5% to 16%. A few pay over 17, many pay well under it. But, and one thing that could have fixed all that was, we could have just had a flat rate of assessment and no deductions of any kind, but I can guarantee you there was overwhelming non-support for that when we had the assessment review task force and asked about it. People wanted their deductions. In fact, some wanted more deductions. So I'm just letting you know there's some of the history behind this too. So anyway, effectively, the diocese as a whole, all the churches pay somewhere between 15.5% and 16% off the total operating revenue before, after deductions. But the rate we talk about is 17%. More questions or comments?
Seattle has a question.
Seattle, go ahead.
Yeah, so I just wanted to get clarification. We're sending a check in with our ID number on it, but nothing else, and then we email in the copy of the monthly version of the spreadsheet and that's
right. All going to the same place.
Okay, but we don't need to send a printed copy of the spreadsheet with the check.
No, and part of that was because we also are having some people pay electronically, or through the bill pay at their bank, so they're not actually sending anything. The bank's doing it, so you would be sending a piece of paper by itself with nothing. A physical stuff costs you the 50 cents for the stamp just to send a piece of paper in when you can do it electronically. So we're trying to eliminate as much of that as we can.
Another question
Okay.
here.
More questions?
What day do you expect to receive the assessment in the month? Because it seems like we normally pay about the middle of the month, but you're recording us as being in good standing on the 10th.
Well, no, we didn't say that. There was a reference in there to talk about when something would get posted on the 10th that was for the previous month's, that'd be for the previous month's payment, not the previous month's calculation.
So what day do you expect?
So that report that would show is going to be basically a month past whenever the payments were supposed to be due. The diocesan canons state that the payments are supposed to be due on by the 15th of the month. What reality happens is many pay around the 15th, several pay at the end of the month, several don't even get it into the start of the next month. Okay? So what happens is there'll end up being a lag on that report based on how soon you get it in. Officially, it's supposed to be by the 15th of the month. So between the 1st and the 15th, you would have time to do your calculation, send in the payment, and get it there by the 15th. And there's some churches that probably will do that. We're not all trying to be Nazis and be all over the top of this and make sure everybody has it by the 15th. Mostly the deal is regular payments to the diocese for everybody keeps everything working, and that's good. But certainly during that month, get it in, and then it's a matter of how things go in terms of whether it makes it into that report by the 10th of the next month or not. So remember, it's running behind an extra month, or most of a month.
Okay, are you saying we're fine if we send in both the check and the spreadsheet by the 15th? Send them at the same time?
Believe me, if everybody did that, we'd be probably jumping up and down for joy.
Okay, I was just trying to figure out what you would like. They're not exactly
There routinely are congregations, 8 or 10 of them, that don't even get it by the end of the month, and so they appear on that report that comes out around the 10th of the next month. They appear as being a month behind. So just to that's how that goes. Okay, so we know some people aren't getting it in until very late in the month, or the start of the next month, or even the middle of the next month. They usually make it up at the end of by the end of the year, or the first week of January. They pay the last they're supposed to pay, and it gets recorded in the previous years. So, okay. Other questions or comments?
Hey, Jim, we have a question from Port Angeles about the timing of payments, and just a clarification, maybe similar to the question you just answered, about December. So we're.
Okay.
Well, I'll let.
The question is that we already pay our assessment for December in December, and so we're going to pay another assessment in January of next year for December. In other words, we have an assessment.
No. You're not. What you're doing is you're using the previous month's calculation to determine what the payment is for the next month. So you're paying December this year, this one time, you're paying December this year based on the 2 years previous NDI report, and you pay the same amount all this year, and you finish that. Now we're starting the next year, and for the basis for this January's payment, you're using December's finances to do the calculation for what you will pay in January. It's the basis you're using, you're not making two payments for December. You're making a January payment for January based on 1 month previous, not 2 years previous.
Under the old rules, it would have been for 2017, is what this year will be, this January, or December.
Well, no, this what you would have paid on the old rules for all of 15 would have been based on 2013's NDI report. Instead of a 2 years old report in old finances, you're paying it based on just the previous month's information.
Yep, we're good.
You see that?
Yep, we're good. Thanks, Jim.
Okay. The key about this is just be honest about this. Churches that are growing fast, this is a big hit for you guys, because it means that you're going to get hit on real time now instead of 2 years earlier when you were a lower, smaller church not growing very fast. For churches that are in decline or struggling, they get to use more real time information for their finances to make the payments now, which helps them. And that's just the way the system is being this way. And it's a one-time move to that deal. After that, then the follow-on years and months and everything, you'll be all working off real time all the time. It's this one-time thing. And there could be that this year we end up generating more money than we would have expected to. And we'll talk about that in budget and finance about what we do about it. But it's possible that the extra deductions you can take on the building repairs and the improvements may negate some of that, so it'll be a net zero. I've tried to look at that and make sense of it, but I haven't been able to have enough data to tell me for sure what it looked like. But we are aware of it. We're trying to be clear. The goal is not to get more money from everybody. The goal is to change this to be real time. Hopefully, have it be simple, and once you've done it a few times, hopefully it will be really simple because it'll be rote and very easy to do month after month. And you're not doing it once a year and go, okay, what do I do once a year now with this? It's in front of you all the time, and so you just know. And we'll go from there. More questions? More questions or comments? I'm still seeing Port Angeles. I hear nothing else. Does that mean we're finished?
Longview has a question.
Longview has a question. Go ahead.
Okay, so my accounts are arranged in there are designated funds like the Altar Guild and the Fish Fund, and then there's the operating fund.
Mm-hmm.
This account is just based on what goes through the operating fund, right?
Altar Guild would still be operating.
This is an interesting discussion point. There are churches in the past, many, who have had separate little funds that they have not counted as operating. Some of those are probably valid, others aren't. An altar guild fund or a women's guild or some other kinds of things like that are basically handling some part of the operation of the church, really are truly part of the operating account. Okay. And really should be part of operations and should be accessible revenues. I know in our own church we had that for years, and we eventually moved it over. And the money we got that was being used to feed that fund, we put it into outreach instead, so it ended up being a net zero for us. But for some of you are actually getting the money and you're actually using it for that, that's a different deal. So I just make that comment, and you guys can look at it and think about, and this has nothing to do with the new process, the same way with the old one. If you have a bunch of separate little accounts doing different little things that are part of what would be normally considered operating the church, they really should be part of the larger operating account. You can still keep them separated for purposes of managing them to see what they're spending, but they all count as the operating account.
I may grab you after this little thing.
Okay, so anybody got any follow-up questions from that little thing I said?
I have a question.
Olympia has a question.
Yeah, we have a community dinner every month at our church. That is considered outreach, am I correct?
The money you're spending to put that on? the money you're spending to put that on, that is an outreach function, period.
All right.
You know, whether you're doing it or the food bank's doing it itself, that would be an outreach function.
But the question is, what's the source of the money used for the outreach? Is it from operating income?
That's correct. Everything goes back to where's the source of the money for it. Yeah, if it's part of the operating fund, operating revenues, then you deduct it off there. If it's out of a separate fund, it doesn't have to. You don't get to deduct it in the operating part because you didn't have the revenues in there in the first place.
Jim?
Yes.
What about, so this is a specific thing. So let's say someone gives a memorial dedication for flowers for the altar. Is that considered operating, or is it considered a going into a separate? Is that different than operating if it's given as a memorial?
Flowers for the church is operating.
Yeah, that should be operating again. It's part of operating. Yeah, it just is.
Okay.
Yeah, people give those things, and that's great. But that's actually part of you're doing your worship thing where you get the flowers for it and everything else. That's really part of operating. More questions or comments?
I have a question, probably just for our church, but we have a rental that we're also paying a loan payment on.
Yes.
How, right now, we used to take all the income, take all the expenses, and at the end of the year, there was either a net profit or a net loss. And it got included either in income or expenses at the end of the year.
Yes.
How do you do that on a monthly basis?
You're only showing the net at the end of the year of that.
That's the way the parochial report tells you how to do it. And you use the numbers from the parochial report to do the NDI, or you used to.
Yeah. Well, you're still doing it. It's just you're doing it on a monthly basis instead of once a year. But you do have a unique case there. I may have to get back to you on that one just to be very clear of the best way to handle it. Okay? I'll talk to Lee and we'll just kind of verify what we're doing here.
Okay, I'm actually a Washougal, St.
Right. Okay. One thing I didn't say at the start of this thing, I was hoping that everybody would write on a piece of paper at each site. Everybody was there and an email address, and then one person, please send me that information so I could verify everybody that was at each of the places. If somebody could do that, I would really appreciate it. And put what church you're with and just your email. That way I could contact you. I'll have a way to contact you specifically that way. And then of course, my email address is on the letter if you got it. So you could email me directly on anything like that. But that way I at least can have a sort of a record of everybody that was there at this session. I would appreciate that if we could do that. More questions or comments?
Hey, it's from Seattle. I have a question.
Okay.
January 15th, the diocese expect to receive a check on real time or not. That's
January 15th, the diocese expects to have a check for January's payment, January 15th's payment, based on December's financial information calculated, the NDI on the spreadsheet. So January, it starts in January when you do the January payment, but it's based on the previous month's financial information, not 2 years previous.
right. Okay. And February will be based on January.
Correct. And so on and so on. Yep, that's how it works.
Okay, thank you.
Other questions, comments? Like I say, I hope once you look at this a little bit, you'll go, you know what, this isn't actually that hard. if you're doing financial statements every month for your vestry or bishops committee, you have the numbers already. And you're doing it right then when you do it, not a year at the end, and then you have to go dig around it and find all the outreach stuff and find all the stuff you did to the building. You don't have to go find it once at the end of the year that 11 months ago you don't even remember anymore. This way you're doing it right then, right away. You can set up make any adjustments to your little accounting setup, so it puts it all right there for you right away, and you just pull off the 5 or 6 numbers, put them in there, it's calculated, and you're ready to rock for the next month. That's the hope. Some person even talked about way back in March about an idea, depending on your system, to have a little thing that out of your system have a feed right onto this thing. You know, you could have it set up with a little bit of software function to feed right into this. My little church, that's all we use is Excel, because we're only a $25,000 budget church. So mine will feed right into this thing every month, and I won't have to do anything. You know, it'll already be calculated just off me doing the work every month in the system to do my accounting. So that's how easy it could get. More questions or comments?
I have a question.
Yes.
On your spreadsheet under January, to calculate the January payments, we're using the numbers from the previous December.
Right.
So do I enter all those December numbers in that January column?
Correct.
Okay.
Yes.
So the numbers
the previous
from January, anyone's numbers are really from the previous one on this spreadsheet.
Right. If you think about the columns and see the months across the top, what you're thinking about is this is the January, this is that month's NDI calculation and payment for that month, always based on the previous month's financial information. That's the way you think.
They look at January and then look at my other report. They'll be different because January numbers here are really December's.
Yes.
Mm-hmm. Yeah, but remember, this is a separate thing from doing your normal accounting process. And the old way before was you were doing it from 2 years ago, some calculation made 2 years back. Now you're just doing it from 1 month back, and more often.
Was that your finish?
Yes.
Could you introduce Lee to all of us?
Yes. Let's do that. Lee has his hand up at the back of the room with a blue shirt on in the council room. For those who can see that, put your hand up again. There he is. He was at convention. For those of you who are there, just started as the canon for finance and property, and he's jumping right into this. Is there anything you want to say, Lee?
I just wanted to welcome and thanks for all this attendance. I'd love to hear how many people attended each and every site, so we can get an idea. And if you got any questions, we're looking forward to hearing from them. And any ways we can improve this process, respond to your questions. I'd love to hear from you.
Okay, and now in front, Penny with her hand up there. That's Penny Curtis for the diocese. She's the person who'll be your contact person through the finance office for Lee. So she's the one that's been working the last few months on some of these different things having to do with around all of this anyway, and they've worked it out, and she's going to be the contact person for this. So there she is. Okay. Anything else?
Thank you.
Well, I appreciate everybody coming. Thank you very much. Please send emails to Lee, Penny, whoever, me, whichever, on any questions you have with this, and we'll sort this out. Especially these special case things like the one woman pointed out from Washougal. We just need to make sure we're clear on those. Chris, for 35 years, did that kind of work for the diocese, working with congregations individually, looking at their own special cases, what was going on, and trying to figure out the best way to report. And so we don't have her anymore, so we have to think in terms of how we make sure to get us all covered anyway, and we will. We'll do fine. So thank you very much. I appreciate it. Goodbye.